going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. So I'm a high yield investor. I love dividend growth stocks, but I love high yield. Okay. And some people have been doing this. I saw this on X. And is this an alternative to owing Realty Income? One thing I'll go over with Realty Income, their dividend growth is slow. I'll go over the pros and cons of both of these. And at the end of the video, you tell me in the comment section what you think. I find this very interesting. And it I'm probably going to buy both. Okay, this is an ETF, it's an alternative. My goal is to get to 200 shares of Realty Income. I'm going to get there probably in the next month or two. Well, let's just say by the end of the year, I'll do that because I'm allocating funds and other stuff too, and I'm reinvesting dividends. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out Realty Income and its potential alternative right now. The Realty Income right now is at $56. Since the pandemic hit, it has not covered it all. Now, people like myself are definitely capitalizing on the dip. The average volume is 5.97 million. Market cap is 50.07 billion US dollars. Year range is 50.65 to 64.88. Day range is 56.10 to 56.93. Previous close is 56.56. So I'm just going to touch base with its dividend growth history. Okay. Yes, we know funds for operation are decent. Yes, we know it's a big single tenant landlord. I mean, everybody has posted videos about Realty Income, but I'm going to touch base with the dividend growth history and the trends and why some people that I've seen on X actually provide alternatives. And it brought up an interesting point. Let's look at its dividend history. We'll start in 2017. It was 20 cents. Then it was 21 cents. Then 2018, 22 cents. Then 2019, 23. Then in 2020, it was still 23 cents. Then in 2021, it cracked 24 cents. Then in 2022, it cracked 25 cents. Then in 2023, it cracked 26 cents. Okay, so it's still 26 cents. And then in March and April, it cracked 27 cents. So you're going to get a high payout ratio, usually with REITs. Okay. The number of dividend increases in the last 5 years, 24. Dividend growth in 5 years is 2.97%. If you bought one share, you made $3.22 with a 5.69% dividend yield. Now, I love Realty Income. I will never sell Realty, but this alternative to it actually made me think a lot, and I wanted to post a video about this. Let's check out this ETF. So this is kind of new, but it's the NEOS Real Estate High Income ETF. Now, it's not going to beat the S&P. It's down versus Realty Income, okay? But it generates some serious firepower. And we're going to jump to the ETF. I'm going to show you what's inside of it. I'm going to show you the potential with IYRI ETF. So its distribution is monthly. We have an expense ratio of 0.68%. It is a little high. The distribution rate is 11.81%. The 30-day SEC yield 3.10%. So we don't really know the average annual total returns because it's kind of new. So the fund seeks to distribute high levels of monthly income through data-driven call option strategy on ETFs that seek to track the Dow Jones U.S. Real Estate Capped Index. Actively managed by NEOS, the fund seeks to offer upside potential in addition to primary objective of high monthly income. The fund may offer efficient exposure to a portfolio of US listed REITs with an enhanced layer of monthly income potential packaged into a single ETF. The NEOS Real Estate High Income Fund seeks to generate high monthly income with the potential of equity appreciation. So, big question it asks in the site, where might IYRI ETF fit in an investment portfolio? So IYRI invests in an underlying portfolio, the US listed REITs, and implements a data-driven call option overlay that seeks high monthly income in addition to the dividends received from the underlying REIT allocations, which may offer investors a higher income complement or an alternative existing REIT allocation. So the NAV performance, 3.22%. That's not bad. Exception, it says cumulative 6.20%. So look at its monthly distribution. I want to bring that up. Yes, there's a little bit of a high expense ratio, but look at the distribution amount. 121.25, 50 cents. 225.25, 50 cents. I'll just say 50. I don't want to really round it, but 325.25, 51 cents. So, hey, now look what's inside of it. This is what makes it very powerful. And guess what? Realty Income's inside of it. So you have Prologis, 7.65%. American Tower, Well Tower, yes, they're starting to make a comeback. Equinix, Simon Property Group, Realty Income, Digital Realty Trust, Public Storage, Crown Castle. Okay, so that's pretty serious. And I'll show you the full holdings. We have Agree Realty Corporation, ADC stock. It actually has AGNC Investment Corp. That's very interesting. AGNC stock is in. Maricold Realty Trust. That one's starting to make a comeback. Cube Smart. I own Cube stock, so that's very nice. Health Peak Properties, DOC. That one, keep an eye on. GLPI, Gaming and Leisure Properties. Like that one. Invitation Homes, INVH stock. I have that one. Iron Mountain, IRM. I have that. So it has some good ones. And actually, NLY, annually cap, that's interesting. It also has Omega Health and OHI. Rhythm Capital, RITM. I own them. So it has some good ones. It actually does have Stag Industrial and it also has Starwood Properties and VICI Properties, VICI. So it has some decent in WP Carry, WP stock. So we have some really good dividend growth ETF. I'm sorry, dividend growth REITs and high yield REITs. So got a nice combination in there with inside this ETF. So let's look at one more thing. So the one thing with NEOS, and yes, I'm a high yield dividend investor, and my dividend investing strategy is high yield REITs, yield dividend ETFs. Okay. So high monthly income investors may seek increased income generation potential within their portfolios through selling option writing and selling. Options-based solutions may be less sensitive to traditional market risk factors such as credit, duration, and inflation. Also, tax efficiency. Index options are classified as Section 1256 contracts, which are subject to lower 60/40 tax rate. So that's interesting. But I'm going to conclude this right now. So, with my conclusion that I have with this video, of course, this is not financial advice. The one thing is dividend growth is a factor. So, the dividend growth is slow. It's going to be a long time before you get to 50 cents with Realty Income. Going to be a long time. Okay. if it's $1 a year, the way the trends are, that's why I say in here, study the trends. It's important to realize that realty income isn't the all, you know, the all factor in investing. Yes, I like realty income. Yes, I like Agree Realty Corporation. I'm probably going to add Agree Realty Corporation to M1 Finance soon, but the trends are slow. Why do you think people got rid of Stag Industrial, Stag stock? Dividend growth sucks. Terrible. Okay. And I'm going to tell you, I'm going to be buying the NEOS IYRI ETF. Looks like a good deal for me. I like passive income. You like passive income. I like monthly distributions. You like monthly distributions. This is why you're watching this video and you guys are subscribers to my channel. I'm very transparent with my investing strategy. My dividend investing strategy, I want to get to 2,000, maybe 4,000 in monthly income. Now, am I going to retire on dividends? It could be a possibility, but I'm just being very transparent that you have to open your mind and expand your dividend investing strategy as I have. Okay, things can change. I had this plan, this, and this. Now M1 Finance is possibly going to change everything. Okay, so I'm hoping that happens. Not a guarantee, but if it does happen, it's going to be a game changer. So I can use the NEOS IYRI invest in all these ETFs that are just like NEOS IYRI ETF, distribute monthly distribution and buy my high yielders, and my high yielders will buy my dividend growth stock. That's a strategy. Or I can use the NEOS to buy my dividend growth stocks. Now, the YieldMax ETFs, MSTY ETF, NVDY ETF, I'm going to be honest with you. Would I just throw FU money in there just to see what happens? Sure. But the reliability is not there with the YieldMax ETFs. Okay. You saw my video, and I apologize. It was a little scratchy and in and out. I don't know what happened there. But you saw ULTY with the distribution being terrible. You're seeing the net asset value erosion with the YieldMax ETFs. MSTY's hanging in there, NVDY's dropping, TSLY ETF is dropping, CONY ETF is dropping. Okay, these weekly pay ETFs, they're dropping. A lot of these people post videos for clicks and they don't care about quality. Okay, they're doing whatever they can, the hottest things. They're going to post videos like crazy. Yes, I did post a little bit more videos on YieldMax ETFs, but I'm just going to be straightforward with you. I'm not doing that just to get clicks. Okay, I'm showing you the trends. This is what I do with my dividend investing strategy, or show you what I like. I buy. It's not financial advice. It's entertainment purposes only, of course. Why I like the trends. You study the trends, you study the trends. Revenue, FFO, like with REITs. Revenue, FFO, dividend growth, expansion. Okay. Did they acquire somebody? Things like that. Look at trends. I'm telling you, that is big key. Don't use your emotions when it comes to investing. Study the trends. Look what happened with YieldMax. The trends are dropping. Okay. The NEOS, they're making they're making noise. The curve yield is making noise. The REX shares are making noise. Competition is fierce with these covered call ETFs and these option income ETFs. I absolutely love this competition that's going on. It is an arms race. You guys that are high yield investors should love this. I have behind the scenes been discussing things or seeing things, or trying to understand things with these ETFs with some of the developers and some of the head honchos with these companies. So, can I get them on here? Maybe. I mean, a lot of them are open to that and they want to be on. I have some interviews going on, so I'll see what I can do. But This is an exciting time for dividend investment, high yield investing. Study the trends, and you will find your dividend investing strategy and develop your dividend investing strategy. You guys take care and have a good one. And I'm going to jump to my disclaimer. So, as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So, be aware and do your due diligence. If you're looking for financial advice, you go to a financial advisor. If you're looking for tax advice, you go to a tax advisor. I don't give financial advice or tax advice. I'm very clear. I have a disclaimer in my description for many of my YouTube videos and YouTube shorts. You guys take care and have a good one, and I'll have a video for you tomorrow.